Good evening, and welcome to the AccendoTraders Group. This is our weekend rapid report for March 23rd, 2008. AccendoTraders.com, effective trade plans delivered daily. So let's go ahead and begin and see what we have on tap for tonight. Again, since it's our weekend rapid report, we're going to start off. We're going to be looking at our watch list tonight. We're going to set some stops and alerts. We're going to check for upcoming economic news. We're going to also check the earnings calendar. We're going to read newsletters, blog. I'll share some information that I read. Check the sectors for trends. Check the indexes, S&P 500, the Dow, and the NASDAQ. Scan for some new trades. Set alerts for those new trades. And then after all of that, we're going to go and have life. So let's go ahead and start off by looking at the economic news for this week. Obviously, we had our intro today, and it was roller coaster. And that's because last week was just all over the place. But in the end, you can see that the Dow was up 400, the S&P 500 was up 41, and the NASDAQ was down 45 points. But you can see also that they're still down for the year. So even though we had a bullish move, it's still a bullish move in a downturn. It's a bullish move towards the resistance. So until we break that resistance, you can swing trade it, but don't trend trade it. Again, we had a very volatile week, mainly driven by news. Every day we had something. Even though we had a light news week, we had some bangers. So, we started off the week with the J.P. Morgan Bear Stearns deal, which, the $2 deal, and that sent the market down on Monday. And then Tuesday we started off good with the Goldman Sachs and the Lehman Brothers earnings, and then in the trading day the Fed cut rate, and even though it wasn't as much as they were wanting, we still rallied very nicely off of that. And then the next day we saw a broad-based sell-off in commodities, and most of you know that I was loving commodity stocks, and then suddenly they just kind of fell off for us, gold and agriculture and the metals and basic materials, but they fell off the map for us. So we kind of switched on Wednesday and Thursday. We switched our swing trading up for calls or for the bull side, and we kind of switched over to swing trading it to the downside. And then the last day of the week, last week was Thursday, and the Fed made an announcement that they were going to expand the criteria for who they're going to lend money in the Fed lending bank. And they were going to allow some of the CMOs and some of the mortgage-backed securities in there. So the market did well on Thursday also. And then remember, Thursday was a quadruple riching day. A lot of things were expiring. So we ended the week up, but, again, we're still down for the year. We're still sitting at resistance. Certainly, we'll talk more about this when we get the indexes, but it looks like we're possibly hammering out a bottom. But again, is it the bottom that we can be giddy about, or is the bottom into the resistance? We'll talk more about that when we look at the charts. This week we've got existing home sales on Monday, consumer confidence on Tuesday, and then Wednesday we've got crude inventory, durable orders, new home sales on Wednesday. Thursday we got GDP, chain deflator, initial claims. And then Friday, we have personal spending, core PCE, inflation, and then revised Michigan sentiment. So you can see this week, we really do have some news coming out each day. All of them are at least a C, if not higher. So certainly it's possible that the economic news can push the market, especially when you can see that we really don't have anything major on earnings. I mean, we do like to look at the housing sector, even though we haven't played it in a while. But we got KBH and Lennar. And then we have Oracle this week. So we don't have anything major this week. We're ending the first quarter. The next earnings cycle is going to be getting ready to start. So the earnings are starting to get a little bit light in the weight there. So again, it does look like some of the economic news may be the drive of the market, and maybe that will allow us to finally break resistance with the market. So with that, let's go ahead and take a look at the sectors. We want to look at the sectors first so that we can see what the sectors are doing before we look at our watch list. So let's go ahead and begin looking at our sectors and see how this roller coaster of love. Starting off by looking at the different sectors. We have 16 that we look at each weekend. And again, what we're trying to find out is if the market is moving into sectors, if it's moving out of sectors. Again, that could affect our watch list, our stocks that we're looking at. So we want to be aware of where, what sectors are moving. So we're starting off here with hotels. And you can see that we formed a good solid bottom here. Certainly, we thought that we might get a breakdown here last week, but we were held on. We did break the 20, which is good news. But again, you guys know with my cautious optimism that until we break this 50, I'm still going to be very cautious, reserved. You can also make an argument for tweezers tops. And if you look, as I'm moving over here, you can see these wicks are kind of coming up here and almost match up with the bottom of these wicks over here. So certainly, even though we broke the 20, we still have some resistance there. But looks okay. Basic materials, we talked about commodities falling off the map, and look at that, huh? Definitely falling off. Certainly looking oversold. And, definitely the volume was tremendous. But you can kind of see that here's our last dip over here, and we got some dips over here. You can see that we didn't violate these support over here around 400. So it'll be interesting to see what happens here if money comes back into commodities. But certainly basic materials is now looking weak. Utilities, kind of blondness. We haven't violated the January low, but we're kind of hovering. Certainly looks weak. Builders, there's a lot of consolidation there. Casinos, we were talking about Wynn and LVS in this range here. We were looking at those stocks, and then like hotels, we're bouncing, but we did not break the 20 here like we did on the hotels. So we broke the 20. So it's definitely still cautious on casinos. Here's coal. We broke out to the downside. We haven't even broken the November lows here, which is interesting, and that's kind of where we are now. If we draw a support line here and match up the January lows over here with the November lows, so this, what we need to do is watch it and see if there's any reason to buy a bounce here, or if we're gonna break, we're probably gonna break hard. So we need to watch coal and see where we go. This week might be pivotal. We'll see. And look at banks. Look at that, huh? Look at banks. Banks broke the 50, so that's certainly good. So definitely we need to look at some banks as we go through, scan for new trades. Biotech, a rising 3 pattern going on here, but we have not broken the 20, so still some cautious optimism. Skipping down to drugs, same thing, rising 3, haven't broke the 20 yet. The internet sitting there right there at the 20, as you'll see with the NASDAQ. So certainly internet stocks, Amazon, Priceline, definitely some things we need to look at. So I've got banks, internet, gold. Gold, just when we are ready to. But, again, here's a double top, tweezer top. We got a lot of people who are possibly waiting to get up there. But, again, if I take this wick and kind of match what's going on over here, you can see that this is a support and resistance level right here around 180. Right around 180 certainly has held, maybe around 181, has held as support and resistance in the past. So, again, just like coal, this might be a point where we might consider start bracket trading it. So gold certainly looks weak, but this might be a good point to get back in. We'll see. Software, look at that, nice rising 3 pattern. Definitely something that we need to be looking at. Insurance, another rising 3 pattern. Maybe the recovering. Remember when Humana and a couple other ones went down. Don't play insurance too much, but they're certainly looking better. But again, you can see with this one, the 50 really has been resistance, the ultimate resistance. So we'll still need to wait for that. Oil certainly looking weak. Certainly looking weak. Retail, very nice at the 50. So we need to put retail down as Kohl's and Sears holding. We'll see what's going on there. Stocks always hovering. Transports, kind of a consolidation move going out there. Broker dealers looking better, but we just rallied to the 10. We'll see. But the broker dealers certainly are looking better, and they had a good week. Energy looking weak, but that's natural gas. And again, we already said that oil stocks are looking weak. Oil stocks